You may have noticed Vestis, VSTS, took a sharp hit recently. One calm reset that's already started to separate headline-driven fear from a clearer operational picture. Instead of panic, see this as a potential reset. Earnings beat, strategic restructuring and smart buying by insiders and institutions can lay the groundwork for a meaningful recovery. Vestis Corporation operates in the commercial textile and facility services space, supplying uniforms, textiles and related services to businesses across multiple industries. Its core revenue drivers are contract renewals, large enterprise relationships, and services tied to uniform rental, laundering, and supply chain logistics. Since spinning off, Vestis has been focused on stabilizing operations, improving service economics, and repositioning the company for steady contract-led revenue. Q4 financial improvement. Vestis reported fourth quarter revenue of $712.0 million, which beat FactSet estimates. Q4 EPS improved to about $0.10 versus prior year pressure, signs that some of the toughest operating dynamics are starting to moderate. Strategic reset and restructuring. The company announced a strategic business transformation alongside its Q4 and full year results. That plan includes restructuring steps and a refocused operating model designed to improve margins and cash generation over the next several quarters. Financial flexibility and governance actions. The company amended its credit agreement to enhance financial flexibility, a constructive move that lengthens runway and gives management room to execute on transformation initiatives. Leadership and board moves. Vestis has made targeted leadership appointments, including a new CEO and several HR, IT, and digital hires. Moves aimed at execution and modernization. Insider and institutional interest. Several institutional investors and insiders have added to positions, including reported acquisitions by large funds and roughly $649K of recent insider buying, a confidence signal from people closest to the business. Industry recognition. Vestis received supplier recognition that underscores the company's supplier relationships and execution in key accounts. Why these items matter for recovery. The Q4 revenue beat shows demand resilience in key contracts and suggests the transformation is not just words on a slide. The amended credit agreement reduces near-term liquidity pressure and lets Vestis focus on margin fixes rather than emergency financing. New leadership and specific HRIT hires are practical changes that improve execution, especially during a multi-quarter turnaround. Catalysts and market context to watch. Quarterly cadence. Upcoming quarter results and management commentary will be critical. Execution on cost saves and margin improvements should show up incrementally. Contract renewals and onboarding. Wins or renewals with large customers can quickly change the narrative for revenue stability. Balance sheet moves. Further progress on liquidity or debt amendments will reduce downside risk and improve sentiment. Investor interest. Continued insider buying and institutional accumulation can support the share price as fundamentals stabilize. What to watch? Investor checklist. Execution versus transformation plan, revenue and margin trends, cash and liquidity runway, contract wins, renewals, and insider institutional activity. Put together, these constructive signals create a framework for why VSTS could rebound. A revenue beat in Q4 and improving EPS show that core demand exists. Management changes and a formal strategic transformation give a roadmap to improve margins. Meanwhile, the balance sheet work and visible insider and institutional buying indicate both operational fixes and confidence from savvy shareholders. In a turnaround, sentiment often lags fundamentals. If management can demonstrate consistent execution through the next few quarters, better margins, improving cash flow, and visible contract momentum, market multiple compression from the sell-off can reverse faster than many expect. That's the recovery setup to follow. Proof in sequential execution, not promises. To summarize, Vestis' recent sell-off looks dramatic on the surface, but beneath it are tangible, actionable items: a Q4 revenue beat, a strategic restructuring, cash/credit improvements, leadership hires, and meaningful insider institutional buying. That combination is exactly what can convert a headline-led dip into a watch-list opportunity. If you found this breakdown useful, like and subscribe for more calm, catalyst-focused analysis. Drop a comment. Which Vestis milestone are you watching? Margin stabilization, contract renewals, or insider buying? This video is for informational and educational purposes only and should not be considered financial advice. Always do your own research before investing.